Hello everyone, this is your structured crypto market update for today. We'll go beyond Bitcoin and Ethereum price action and examine what is happening across capital flows, altcoin structure, derivatives positioning, stablecoin liquidity, and macro drivers, and what it means for the next phase of the market. Market overview. The broader crypto market remains in a macro-sensitive consolidation phase with selective stress pockets. While Bitcoin recently tested lower support zones, the overall market is not experiencing disorder. Instead, what we are seeing is controlled volatility expansion, capital rebalancing, and defensive positioning. Total market capitalization has contracted moderately, but the contraction appears liquidity-driven rather than structurally destructive. There is no sign of systemic instability. The market is not in panic. It is repricing risk. That distinction matters. When markets collapse, they do so through disorder, forced liquidations, and infrastructure stress. We are not seeing those characteristics. Bitcoin, structure, not just price. Bitcoin continues to function as the market's primary liquidity barometer. Recent price weakness reflects macro recalibration rather than crypto-specific collapse. The more important development is structural. The transition from volatility compression to directional testing. Several structural observations stand out. There has been no cascading liquidation event. There has been no abnormal leverage spike. There are no exchange stress signals. ETF flows indicate gradual institutional recalibration rather than abrupt exit. This suggests caution, not capitulation. On higher timeframes, Bitcoin remains structurally intact. However, short-term pressure persists and momentum remains fragile. This is tactical weakness inside broader structural stability. Ethereum and Layer 1 ecosystem. Ethereum remains highly correlated with Bitcoin, but underlying ecosystem activity remains relatively stable. Gas usage has not collapsed. Staking participation remains steady. Layer 2 scaling activity continues to expand incrementally. That signals ecosystem continuity beneath price volatility. Among alternative Layer 1 networks, performance is mixed. Some chains are experiencing reduced speculative volume. Others tied to active ecosystem narratives are holding relatively better. But there is no broad alt-season rotation underway. This is not expansion. It is capital preservation mode. Capital is selective, not aggressive. Capital rotation and sector view. More revealing than price direction is sector behavior. We are observing defensive positioning in large-cap assets. There are selective inflows into specific altcoin-linked instruments. At the same time, appetite for high-beta meme and microcap tokens has declined. Stablecoin dominance remains elevated. That suggests capital is waiting rather than deploying aggressively. In DeFi, total value locked remains relatively stable relative to price drawdowns. That indicates capital is not fleeing protocols en masse. This reinforces the idea of structural resilience. Derivatives and leverage assessment. The derivatives market remains calm compared to prior volatility cycles. Funding rates are near neutral. Open interest has not expanded aggressively. Liquidations are present but not cascading. This is critical. Major crashes typically require excessive leverage buildup. We do not currently see that condition. The market is weak, but it is not overstretched. That reduces the probability of a sudden systemic flush. Weakness is macro-driven, not leverage-driven. Macro and liquidity drivers. Crypto continues to trade as a macro-correlated asset. The dominant variable remains liquidity expectations in the United States. Markets are reacting to inflation signals, Federal Reserve policy outlook, and broader geopolitical and tariff-related developments. When financial conditions tighten or uncertainty rises, risk assets adjust accordingly. The current phase reflects liquidity repricing, not narrative breakdown. Until macro clarity improves, volatility will likely remain reactive rather than decisively directional. Liquidity expectations are steering short-term behavior, infrastructure and regulatory backdrop. Over the past 24 to 48 hours, there have been no major exchange failures. No systemic hacks. No large-scale regulatory crackdowns. Infrastructure remains operationally intact. This matters because structural weakness typically begins with trust breakdown. We are not observing that. The informational backdrop is neutral, and neutrality in a fragile environment provides stability. What actually matters right now? The structural picture today shows short-term bearish momentum, gradual institutional de-risking, no excessive leverage, stable on-chain metrics, and macro uncertainty. This is not a collapse phase. It is not expansion either. It is a liquidity stress test phase. Conclusion. Going forward, 3 variables will define the next move: ETF flows, macro data, and derivatives positioning. If liquidity stabilizes, the recent weakness may evolve into range recovery. If macro pressure intensifies, deeper support levels may be tested before structure rebuilds. Right now, the market is recalibrating, not breaking. That's your full structured crypto market update for today. See you in the next one.